15 reasons having business credit is a must for every successful company, and how not having it will cost you. Business credit is credit in a business name linked to the business's employment identification number. This is credit for a business. It's not linked to the owner personally. It's also not linked to their personal Social Security number. Using business credit, a business owner can get vendor credit cards, high-limit accounts with most major retailers, fleet credit, and cash credit, including Visa and MasterCard. Get approved for business credit accounts regardless of personal credit quality. When you build business credit the right way, there is no Social Security number supplied on the application. With no SSN supplied, there is no personal credit pool. Because of this, a business owner can get high-limit business credit accounts. This is regardless of personal credit, no matter how bad it may be. Personal credit quality does not matter. Reason number 1. Business credit doesn't affect personal credit. Business credit reports to business CRAs, not consumer CRAs. As business credit is used, it has no adverse impact on the owner's consumer credit. This is because it's not reported to consumer agencies. It means utilizing the account, even over 30%, won't have any adverse impact on personal credit scores, and there are no inquiries on the personal credit when applying for business credit, as long as a business owner doesn't supply a Social Security number. 10% of a total consumer credit score is based on inquiries. So if a business owner is using personal credit to apply for business loans and credit, then their scores will go down as a result of those inquiries. Personal credit inquiries can stay on credit reports for an extended period of time. This affects the ability to borrow more money. Some unsecured business lending sources won't even lend money if there are 2 inquiries or more on personal credit reports within 6 months. Reason number 2. Save your personal credit utilization rate. Save personal credit for personal expenses. Using personal cards to pay business expenses will harm utilization rate. Utilization rate equals the amount of credit used divided by the total available credit. Keep this percentage at 30% or less. Handling business expenses with personal credit can make this nearly impossible. 30% of total consumer credit score is based on utilization. So by using personal credit to get credit cards for a business, using those cards will lower personal credit scores. Using more than 30% of the limit will result in a score decrease. So if the limit is $1,000, a balance above $300 lowers scores. This means 40% of the total score is damaged just by applying and using the credit obtained using consumer scores. With true business credit, 0% of a consumer credit score is affected. Personal credit scores are based on 5 factors. Payment history counts for 35%. Utilization counts for 30%. Length of credit history counts for 15%. Accumulation of new credit counts for 10%. And credit mix counts for 10%. Reason number 3. Good business credit scores can be built quickly. Business credit scores are mainly based only on if a business pays its bill on time. The D&B PAYDEX score is the most widely used business credit score. It's solely based on payment history. The Equifax Small Business Risk Score is also based solely on payment history. The Experian Intellis score is primarily based on payment history, and about 65% of the score is based on how people pay. D&B's PAYDEX score is based on payment history. A 100 means a creditor can expect a payment may come early. An 80 means payment is prompt. A 70 means payment comes 14 days beyond terms. A 60 means payment comes 21 days beyond terms. A 50 means payment comes 30 days beyond terms. A 40 means payment comes 60 days beyond terms. A 30 means payment comes 90 days beyond terms. And a 20 means payment comes 120 days beyond terms. Consumer credit scores are made up of 5 factors. As a result, it takes years of well-disciplined borrowing to get really good scores, but business credit scores can be built much faster. This is because all that's needed is to have accounts reported with good payment histories. Let's recap. There are a lot of reasons business credit can help any business. It's independent of personal credit, so using it doesn't affect utilization rate. It can be built quickly. Since anyone can see business credit reports, Building business credit bolsters your reputation with suppliers, customers, and even competitors. Business credit protects your personal assets and doesn't require personal guarantees. Business credit increases the value of a business, and it determines loan approval and quality. It effectively doubles your borrowing ability and has very high limits. Even startups can get it with no financials or collateral. It is a huge competitive advantage and is the best way to fund a business. Big established companies use it. Why shouldn't you? Build business credit before you really need it, and it can only help you. Contact us today to learn more about 15 reasons having business credit is a must for every successful company and how not having it will cost you.